And John, of course, the big question is, will this inject confidence into the market, or will it lead to other mortgage owners to actually try to get their money back given the slump in property prices?
That's right. The big concern is that more people will follow suit and also stop paying these mortgages. As of Friday, this boycott had spread to more than 80 cities. We're talking about more than 200 projects where people have stopped payment. What we've learned is that regulators here in China are considering a holiday of sorts on those payments and the mortgage payments. So home buyers would be allowed to stop making the payments without any penalty, without it hurting their credit scores. Again, I have to underline that this is something being considered before this becomes actual steps to help the situation. We have to get senior leadership in China to approve it. And so there is the possibility that this does not come through, but there is a lot of pressure on Beijing to act to help prevent this spiraling into potentially a crisis for the banking sector here. And so we are looking forward to that.
There are other signs of potential government or regulatory intervention, right? Are we hearing about the possibility for more credit to be extended to some of these developers so they can get construction back on track, or potentially even the government buying back some of these projects?
Well, we have heard from the banking regulator that they are urging the commercial banks here in China to lend to these projects so that they can get that construction back underway. Whether or not the local governments will do more, potentially taking over some of these projects, is still a little uncertain. There has obviously been calls. We had yesterday the former Vice Finance Minister Zhu Guangyao calling all local governments to do all they can to help the situation. So obviously, given the priority that the government here places on social stability, given the fact that we have people who have plunked down their life savings for an apartment that has not been built yet and now are in the risk of losing that apartment and still having to make mortgage payments, the threat to social stability is very high. And so the government here has shown a history, a willingness to take action when that is at stake.
We've also seen the Chinese central bank injecting additional liquidity into the system. So what are we seeing in terms of risks that authorities are considering at this point?
So the risk here is we have, by some estimates, Deutsche Bank, GF Securities estimating that there are about 2 trillion yuan worth of mortgages on which payments have stopped. The banking system here in China has about 38 trillion yuan of mortgages on their books. And so you can see the threat, if that were to spiral, if that were to increase the threat to the banking system. The central bank yesterday coming in, injecting money in their open market operations for the first time since June 30th, making sure there's plenty of liquidity, making sure that there is not contagion potentially from this spreading to other parts of the market.